Well, I think the overall market obviously has had an unbelievable rebound that we've all been talking about. So I think arithmetically it certainly has. But don't forget, we've had massive liquidity that's come into the market. We've got bond yields that, as Rick just described, are historically low. And I think there's more optimism than pessimism that the economic numbers and the worst of those numbers are behind us. It remains to be seen if we're going to have coronavirus numbers in the fall. And for now, I think with a massive short squeeze that we've seen, as well as some fundamentals improving, the market is where it is, I think, for some good reason, and that is it's predicting better numbers down the road as opposed to worrying about bad numbers going back.
Stephen, if I'm persuaded that Mark is right and it is up for the right reasons, are there areas of the market that have not participated that offer greater value right now?
Yeah, sure. And look, I would disagree a little bit and just say the market probably has put in a low. But look, we've run very, very far too fast. I saw on your channel here, we're having the best month since 1991 with only 25% of companies actually reporting earnings. Everybody knows the June quarter is going to be bad. The numbers are going to be terrible. Look at a company like Union Pacific. They reported last week, and their volumes are going to be down 25% year over year. And that's on bad volumes they saw in 2019. The question is going to be, will you see sequential improvement in the September quarter over the June quarter? That's really where you're going to see whether the market has legs or not. There's been fundamental monetary and stimulus that the government has given us. That's been really a bridge loan to the U.S. economy that has taken off the left tail risk. But to go further in the market, we're going to have to see real earnings. The S&P 500 is flat over the last 12 months. We're going to have the biggest peak to trough decline in real GDP that we've ever seen. So there's going to be volatility. We're going to have to chop some wood here. We would focus on, at the Federated Kaufman Fund, small cap stocks where maybe the earnings power or the momentum that the company actually has even today is still not fully understood.
So, Mark, why don't you respond to what Stephen said there? And I think implicit in that is the question of how fast the economy will come back when it starts to come back. And earnings will depend on, among many other things, the return of demand on the part of consumers and whether they're going to go out and spend the way they did, how quickly those who've been knocked out of work get back to work and have incomes that they can spend. So where are you on that, Mark, in terms of how quickly you think the economy may return?
I think it's going to be slow. I mean, I think we're going to get some experiments by some of these states that have opened up, like we saw with Georgia on Friday. But I think the coasts, where a lot of the economic power of the country is going to be slow to respond. So the return of the retail stocks and the airline stocks and the cruise line stocks and the restaurant stocks, I think it's going to take a while. If you're looking at technology and healthcare, where a lot of JMP concentrates, I think we're seeing a lot of those earnings, like we've been saying, probably will trough in this quarter, but there'll be some acceleration in demand and some numbers going forward. And I think, like we've been saying, that nobody's expecting the current quarter or the previous quarter to be terrific. I think the question is, where are you putting money to work? And at JMP, we spent a lot of time on some of these small and mid-cap healthcare and tech names, and I think those numbers are good. We haven't even talked about the potential for some optimism on some antivirals and some optimism on getting some people and I'm not even talking about vaccine because I don't expect it anytime soon. But I think if we do not have the wave that is predicted in the fall of repeat customers on the coronavirus side, if we do not have that many people getting sick in the fall, the economy is poised to rebound. And I think people are showing in those states that have opened up, they're willing to spend money. And I think that's going to happen.